Grayscale Bitcoin Trust ETF is a financial instrument that allows investors to gain exposure to Bitcoin without directly holding the cryptocurrency. To understand GBTC, let's break it down step by step. First, it's essential to know that GBTC is an exchange-traded fund that holds Bitcoin on behalf of its shareholders. This means that when you invest in GBTC, you are essentially buying a stake in the trust that holds a certain amount of Bitcoin. The trust issues shares that are traded on the over-the-counter market, allowing investors to buy and sell GBTC shares just like they would with any other stock. The price of GBTC shares is derived from the value of the Bitcoin held by the trust, which is calculated based on the current market price of Bitcoin. One key concept to understand is the premium or discount to net asset value. The net asset value of GBTC is the total value of the Bitcoin held by the trust divided by the number of outstanding shares. If the market price of GBTC shares is higher than the net asset value, it is said to be trading at a premium. Conversely, if the market price is lower than the net asset value, it is trading at a discount. For example, let's say the net asset value of GBTC is $10 per share, but the market price is $12 per share. In this case, GBTC is trading at a 20% premium to its net asset value. This means that investors are willing to pay more for GBTC shares than the actual value of the Bitcoin held by the trust. It's also important to note that GBTC is not an actively managed fund, meaning that it does not attempt to beat the market or make investment decisions based on market conditions. Instead, it simply holds Bitcoin and allows investors to gain exposure to the cryptocurrency through a traditional investment vehicle. In terms of best practices, it's essential to do your research and understand the fees associated with investing in GBTC. The trust charges a management fee of 2% per year, which is higher than many other investment products. Additionally, investors should be aware of the risks associated with investing in Bitcoin, including volatility and potential losses. Overall, GBTC provides a unique way for investors to gain exposure to Bitcoin without directly holding the cryptocurrency. By understanding the key concepts and risks associated with GBTC, investors can make informed decisions about whether it is a suitable investment for their portfolio.